The United States and China have been locked in a bitter trade war for the past few years. This conflict has shaken global markets and stoked fears of a new Cold War. However, a glimmer of hope emerged on May 12, 2025. The two economic giants announced a 90-day pause in their escalating tariff battle. This truce, reached after days of intense negotiations in Geneva, marks a significant development in the US-China relationship. It signals a willingness to de-escalate tensions and find common ground. While a permanent solution remains distant, this pause offers a crucial window of opportunity. The world watches with bated breath. Will this truce pave the way for a more stable and predictable trade relationship? Or will it prove to be a temporary reprieve in a protracted economic conflict? Only time will tell. One thing is certain: the stakes are incredibly high. This truce represents a critical juncture in the US-China relationship with far-reaching implications for the global economy. Consumers in both countries. The announcement of the trade truce triggered a wave of optimism across global markets. Investors who had been bracing for further escalation responded with a collective sigh of relief. Stock markets worldwide surged, reflecting renewed confidence in the global economic outlook. The Dow Jones Industrial Average soared by an impressive 954 points, a gain of 2.3%. The S&P 500 and the tech-heavy Nasdaq Composite Index also posted significant gains, rising by 2.6% and 3.6% respectively. European markets followed suit, with the German DAX and French CAC 40 indices climbing by 1% and 1.3% respectively. The Chinese yuan, which had weakened considerably against the US dollar during the trade war, also got a boost. It surged to a 6-month high, reflecting renewed confidence in the Chinese economy. Commodity markets also reacted positively to the news. Brent crude oil, a global benchmark, rose by nearly 3% to reach $65.75 per barrel. This increase suggests that traders anticipate increased demand for oil as trade tensions ease. While the tariff reductions dominate the headlines, the 90-day pause encompasses a broader range of issues. The fentanyl crisis, a major point of contention between the two countries, featured prominently in the negotiations. The United States has long accused China of being a primary source of fentanyl, a potent synthetic opioid responsible for countless overdose deaths in America. While China denies these allegations, it has pledged to cooperate with the U.S. in combating the illegal fentanyl trade. U.S. Treasury Secretary Scott Bessent, speaking after the agreement was reached, acknowledged China's increased engagement on the fentanyl issue as a positive step. This suggests that the trade negotiations served as a platform for broader diplomatic engagement on critical issues. Beyond fentanyl, the agreement reportedly includes provisions addressing intellectual property rights, forced technology transfers, and market access. These are all long-standing grievances that the United States has raised with China. Section 5. Expert Opinions, a Cautious Optimism. The 90-day trade truce has elicited a range of reactions from economists and political analysts. While most agree that it represents a positive development, many caution against premature celebrations. William Shin, an analyst at Spring Mountain Pujiang Investment Management, described the agreement as exceeding market expectations. He believes that it will boost investor confidence and provide a much-needed boost to the global economy. However, Wang Wen, a professor at the Chongyang Institute for Financial Studies at Renmin University, offered a more cautious assessment. While acknowledging the agreement as an unexpected achievement, he emphasized that structural contradictions between the two economic giants remain. Paul Diggle, an economist at Aberdeen Standard Investments, highlighted the significance of the tariff reductions. He noted that the average U.S. tariff on Chinese imports would fall to 27%, down from a peak of around 60%. George Ligarius, chief economist at Mazars, urged caution. He warned against premature celebration, pointing out that significant trade uncertainties persist and that the underlying issues remain unresolved. Section 6. A win for China? Equality and respect. The Chinese government, for its part, has framed the trade truce as a victory for multilateralism and a testament to its commitment to dialogue and cooperation. Chinese officials have repeatedly emphasized the importance of mutual respect and equality in the U.S.-China relationship. Hu Xijin, a prominent Chinese commentator and former editor-in-chief of the Global Times, a state-run tabloid, hailed the agreement as a great victory for China. He argued that it demonstrated China's ability to stand up to U.S. pressure and defend its core interests. The Chinese government has long maintained that the trade war was initiated by the United States, and that it ran counter to the principles of free trade and fair competition. The 90-day pause, in their view, represents a step towards a more balanced and equitable trade relationship. China's emphasis on equality reflects its growing economic might and its desire to be treated as an equal partner on the global stage. Section 7. The road ahead, uncertain terrain. While the 90-day pause offers a welcome respite from the trade war, it is essential to recognize its temporary nature. The agreement merely postpones the imposition of further tariffs. It does not resolve the fundamental disagreements that sparked the trade conflict in the first place. The next 90 days will be crucial. Negotiators from both sides will need to engage in intensive talks to address the complex issues at the heart of the trade dispute. These issues include intellectual property rights, forced technology transfers, and China's industrial policies. The U.S. has also expressed concerns about China's growing technological prowess, particularly in areas like artificial intelligence and 5G telecommunications. The path forward is fraught with challenges. Failure to reach a more comprehensive agreement could lead to a resumption of the trade war with renewed intensity. Section 8. Beyond tariffs, strategic decoupling. Even if a trade deal is reached, it is unlikely to signal a return to the status quo ante. The trade war has exposed deep-seated tensions and mistrust between the United States and China. These tensions are unlikely to dissipate overnight. The concept of strategic decoupling has gained traction in Washington. This approach envisions a partial disentanglement of the U.S. and Chinese economies, particularly in critical sectors like semiconductors, telecommunications, and artificial intelligence. The Biden administration has shown a willingness to continue some of the Trump administration's tough-on-China policies. It has maintained tariffs on Chinese goods and has sought to strengthen alliances with countries in the Indo-Pacific region as a counterweight to China's growing influence. The trade war has also prompted China to accelerate its efforts to become more self-reliant in key technologies. Section 9. A new era in U.S.-China relations? The 90-day trade truce marks a pivotal moment in the U.S.-China relationship. It remains to be seen whether this truce will pave the way for a more stable and cooperative relationship, or merely serve as a temporary interlude in a protracted strategic rivalry. The outcome of the negotiations over the next 90 days will have far-reaching implications for the global economy and the balance of power in the 21st century. The world is watching closely,